Good evening, everybody, and we have a very powerful and exciting panel. I have some very interesting and esteemed guests on the panel, and I'm totally excited to talk about this. Uh, how's the conference been so far for everybody? Good? Okay, so we are talking about the next 10 years of Bitcoin, but we cannot just have a hard line only on Bitcoin because there is so much happening around Bitcoin and with other emerging tech that we'll have to cross over a bit outside of Bitcoin as well. And let's make this very interactive. Please feel free to jump in. Whoever feels they have a better expertise in that domain and they would like to answer, I would love to start with that person immediately. Just a second, guys. We changed a couple of formats, so I'm just trying to get the updated one because it needed to be approved by somebody, which has been approved finally. So, thankfully. So to start with, where do we see Bitcoin and all major cryptocurrencies in 10 years from now? When I say in 10 years, not just in value, but in adoption, in the real world usage. Oh, we have Adam back. Thanks, Adam, for joining us. It's a great privilege. So the first question is, where do we see Bitcoin and all the major cryptocurrencies in the next 10 years? And please feel free to share your quick vision. Do we have Mike?
Yeah, shall I go first because I've got the mic? Yeah. I see much wider adoption of cryptocurrencies generally because of the changing nature of the workforce. People are traveling much more, they're working much more in the intangible digital economy, and as a result, to reflect the changing nature of their work, we need more use of effectively borderless money. It's just so inefficient to pay people in national currencies if they are not specifically working in and living in one country. So the changing nature of the workforce is going to change the type of money that we use. And so with that in mind, but I see, Bitcoin will play a huge role in that. I think, as a result of this conference, and particularly as a result of listening to you, I've become very skeptical. I've become a bit more of a Bitcoin maximalist than I was, and I see the flaws in all the alt currencies. But at the same time, I'm also aware of moods, and a year or 18 months ago, Bitcoin maximalists were sort of ridiculed, and now the shitcoins are being ridiculed, and these trends can change, and so it might be that altcoins somehow stage a comeback, but there's increasingly going to be so much more adoption. I see huge potential in Libra, despite all the regulatory problems it's going to encounter, just because of the sheer size of Facebook's network, and particularly in Asia, where I think the regulators will just be too slow to stop it, sort of thing. And for many people, who get a smartphone for the first time and are able to start sending payments, I see Libra doing something similar to the M-Pesa, but on a much bigger scale. But generally, and I think eventually, national currencies will start going onto blockchains as well. But as the workforce changes and we become more international, national currencies are just going to look outdated and almost anomalous.
Hi, yeah. So I think over the next 10 years, it's a big question because that's a long time period, but I think Bitcoin is going to become dominant not just in the sort of government fiat world, but also in the crypto world, which it already is at like 70%, but I think it's going to extend that a lot further with its dominance. And the reason for that is just the thing I look at for where Bitcoin is going to be is its network effects. So it has several interlaced network effects such as speculation, merchant adoption, consumerism, mining development. And the ones I'm really interested in, which I think are coming up, is financialization and the global strategic asset part of Bitcoin, which I think is what is going to really drive it to become the dominant unofficial global reserve currency of the world. And the reason for that is purely because of the regulatory arbitrage, and I think it's going to make governments compete on a global scale to not only invest in it, but to also mine it and to create an environment that's going to attract all the businesses to their countries at a time when they're going to be desperate for any type of growth and employment when the legacy fiat system falls apart. So that's the way I see it, and that's why I think Bitcoin has really become dominant, and that's what will push it towards the hyper-Bitcoinization stage, where if you think Bitcoin's expensive at 10,000, wait until a large chunk of the 400 trillion global assets finds its way into Bitcoin. I won't be surprised to see it do another 100x from here. I think that's realistic. So that's where I see Bitcoin going over the next 10 years. Yeah.
All right, I'll try to make it quick. I'm not concerned whether, like the altcoins, I think they're all going to trend towards zero. So it's only going to be Bitcoin. I mean, it sounds great. I mean, I don't know. I have to wait for Libra to launch. Like, I'm not going to speculate whether Libra will or won't launch. It may never launch. Facebook has tried to do payments before. Libra's too weird to me. I'm not gonna. I'll speculate on Libra's success after there's actually a Libra for me to hold. Until then, it's just a white paper that may or may not arrive. But look, I do believe in Bitcoin. I think it'll do very well within 10 years, especially in 10 years from now. I think there will be a major global economic downturn, not next year, not the year after, but within the next 10 years. Yeah, probably on the second half of that. But my biggest concern is not even the mining structure of Bitcoin or the Bitcoin core code or quantum miners. My biggest concern is actually like the European government and Australian government and the US government actually getting together for once and just declaring a war on Bitcoin. Because I think that would be dangerous for a lot of us, especially those that have it in a public eye. So that's actually my biggest concern as to whether the governments are going to accept it or not. Bitcoin is going to win regardless, but just like marijuana won, but it took 40 years, right? Like I don't really want this fight to last 40 to 50 years. So that's my only concern.
I mean, I think it's interesting how Bitcoin can exist in 10 years as a thing that's not that much bigger than it is. You know, when you talk about, Bitcoin, say, 5 years ago, 7 years ago, could Bitcoin exist at that stage in another 10 years? And I think the answer is no, it would be too small. It would get killed off by, some low-level bureaucrat who had a bit of spending money left over, for his yearly budget. But Bitcoin's now at the point where it is big enough that it actually does take concerted effort to go take it down. And I think there's a decent chance that effort will never come because governments will, never get together and decide to go get rid of it. I mean, look at how in the US Ethereum, for, all of its dubious starts, it looks like the regulatory response to that's basically being, well, we'll let that one be an exception. We're not going to even bother trying to go fight that. And Ethereum is much easier to kill than Bitcoin is. I mean, at very minimum, its market cap is 10 times smaller. It's far more centralized. And if they're not even going to pick a fight with that, let alone Bitcoin, that actually says something really good. Now, this isn't guaranteed. Maybe they will get together and properly, work together. But I mean, when was the last time you saw, the U.S. and Europe really feel good about fighting something together? You might have to go back a few decades. So I think that's a very hopeful thing.
So the question is about cryptocurrencies in 10 years from now in general, and the point is that cryptocurrency can mean actually anything. If it means any kind of financial value which uses cryptography to be transacted digitally, then I see a lot of cryptocurrencies like Apple shares, Facebook shares, national debt, dollars or euros on top of PayPal. They are cryptocurrencies by definition. If with cryptocurrency you mean actually decentralized cryptocurrencies, then I only have two of them in my mind. I know that many of you think that I was going to say one because of the shirt, but I think that in 10 years we will see two major decentralized cryptocurrencies. One, Bitcoin, will actually start to fade away. People will not use, adopt, and talk of Bitcoin outside a very small niche. The other cryptocurrency will be the Satoshi. That will be something. Yeah, it's I mean, more, a little less divisible, but it is not so expensive as a Bitcoin. Bitcoin will be a niche phenomenon. Satoshi will be a mass phenomenon.
So I think like when we try to think about the future of Bitcoin, where it will be in 10 years, I think it's very hard because there are a lot of external factors that may influence the future, the future of Bitcoin in the coming years, because it's fairly easy to try to predict the technological developments. We can try to project the past years in the future, but we cannot really predict if there will be a financial crisis in the coming years, if the political situation will change, because actually Bitcoin will be adopted only if there is enough people that actually need it and they know there is this tool that can solve some problem for them. And nowadays, I'm not sure there are that many people that actually really need Bitcoin, because in the developed countries, the financial system is still quite stable and functional. But this may change in the future. So maybe due to external factor, we may have mass adoption in 2 years, or it may take like 40 years. And also I think like we always focus mostly at Bitcoin usage at individual level, while I think maybe we will see the adoption starting more from a nation-state level. Because at nation-state level is where we are closer to already have some sort of anarchy, so there is no real like international body that really can enforce rules to nation-states. We have like the United States, but it's not like really that powerful to enforce rules. So in this, especially if the United States start to withdraw from international politics and become more an isolated country, there will be more like some sort of more anarchy at international level. So Bitcoin will be maybe very useful to do international settlement between countries. Because already today many countries are stopped using the US dollar for international settlement because they're afraid of sanctions that may happen in the future. So Bitcoin could have a role there. So I believe that we will see significant adoption at that level before we will see it at the individual level.
So I think if you look at why Bitcoin is interesting, so Bitcoin has many interesting properties, so different people will find different things interesting, but and those different reasons could be how they got aware of Bitcoin, but I think the interesting things are the things which are differentiated, which banks can't compete with even if they want to. Because if Bitcoin was about cheap payments, banks can price dump. That's what happens when people start new airlines. That somebody tries to start a new airline, the incumbent drops the price to very low, the new business goes out of business, and then they raise the prices again. So in the early parts of Bitcoin, some people got hold of the mistaken idea that Bitcoin was about free payments or cheap payments. And so I guess the success for them would be that Bitcoin would fail because banks would drop the payment fee to zero, and then Bitcoin would fall out of favor because it would be relatively expensive, and then they would put the fees back up. So, but I think that's mistaking the value in Bitcoin. I think the value of Bitcoin is that it doesn't require permission, and you can just open a wallet and start to receive Bitcoin, and it's a tool which helps people to understand more about money and control, so they can see that they can take more self-sovereignty and control and start to think about systems of control in the world and how that's a bad thing. So I think I would like to see more people form that realization and opt into Bitcoin. Maybe not, it doesn't mean that they do everything in Bitcoin or that they invest 100% or 110% or something, but that they recognize the value of being partly invested in Bitcoin and the types of payments that are possible with Bitcoin that are not possible otherwise, or that expose you to tracking or risk by doing in other ways than using Bitcoin. So, one thing I've said before is that if you want to identify a differentiated transaction, you would think if you tried to do it with Bitcoin and Bitcoin was down for maintenance, which doesn't happen in practice, then what is your reaction going to be? Is it going to be, oh, well, no problem, I'll just pay with my debit card or with cash, or am I going to wait till it comes back up? So if it's the transaction that you wait till you can transact with Bitcoin, that's a differentiated Bitcoin payment because you would only want to do it with Bitcoin, so you're relying on Bitcoin. Another way to look at it is what people will be willing to pay, so you can use the price insensitivity as a proxy for perceived value. So people will, if you said the transaction fees would go up, that would cause some people to say, well, I like it, but it's too expensive, I'll use my debit card instead. Well, the people that would keep paying the price clearly ascribe more value to being able to transact with Bitcoin. So obviously we want Bitcoin to be as scalable as possible, so as many people who want to get the benefits of the unseizability and self-sovereignty to be able to avail themselves of that as possible. But we don't want to do that while destroying the self-sovereignty in the system, because that would be a kind of pointless exercise. So anyway, during the next period, I hope that there's a lot more development of scalability and privacy and fungibility and sort of finality and unseizability. So just Bitcoin becoming more Bitcoin, basically, and people using it for its real value as opposed to being oversold, on it being cheap or something that is not its core value. I think that's dangerous. If we get, tens of millions of users using it for confused reasons, they will start to complain and try to change Bitcoin to be what they were missold that it is.
Thank you, Adam, and thank you, everyone. With regards to just a small addition with regards to Libra, I don't know if you have seen the news today, MasterCard, Visa, PayPal, Stripe, everyone has left, and completely, eBay as well, have completely detached themselves with Libra, and I don't see that as a very positive news for Libra, even though they have the network effect and all of that. But it's definitely like suddenly all of these guys who are running towards Libra are now running away from Libra, which is quite funny. We'll see how that pans out. But with regards to adoption, coming back to one more important question, if you look at the e-commerce data just for 2019 alone, we are currently at around $3.5 trillion worldwide. And I strongly feel when I speak to college students globally that they really are doing everything online. They are purchasing, including their groceries, online now. And I think the overall e-commerce usage is definitely going to be a very powerful adoption pusher in a way. But I'm not sure if Bitcoin is ready to do that now or even after a few years, or are there any other cryptocurrencies who are going to really take that space, because that's a big chunk of transactional value out there. $3.5 trillion per year is not a small amount. And now there are companies, I was studying a recent new company called FXC, FlexaCoin in New York, who have claimed to solve some interesting situations in this space. But what is your view, and which is a cryptocurrency, or will Bitcoin ever be ready to take on existing payment options like all of them, right from PayPal to MasterCard to Visa, and it's still a good value for the buyer and the seller at the same time?
Well,
Peter.
I think, when you're talking about like online payments, things like groceries and so on, we're definitely going to see cryptocurrencies take that over. In fact, we kind of already have. We've seen the cryptocurrency called Visa and the cryptocurrency called MasterCard, and they use crypto, and there's currency involved, so right there you've got a cryptocurrency. It's not a very decentralized cryptocurrency, but that's the technology, kind of a bit of a kludgy one. I hear the databases don't have good blockchains behind them, but from the user's point of view, none of that stuff matters. All that matters is, are they allowed to go and buy their groceries? And for most use cases, for most people, no one's going to tell them not to buy their groceries unless they run out of money, and Bitcoin can't help with that. So, I think getting back to Adam's point, like we can't compete against that. We might be able to compete against that in a place like, say, Hong Kong, where there might be a significant number of people in 10 years who are de-enfranchised by their government, but it's a tough thing to compete with, and it's not, we're never going to capture a significant chunk of that $1 trillion unless the world is a unrecognizable place.
Yeah, so, agree with Peter. So again, what I'm very confident in, it's not going to be another cryptocurrency, what people call cryptocurrencies, altcoins. It's not going to be any of those. The question is, will Lightning allow people to use Bitcoin to get into a chunk of that peer-to-peer, so you're paying, with Bitcoin directly to the merchant, or, but even if that doesn't happen, I mean, like if Coinbase ever actually knew what they were doing and they were, challenging the real traditional banking system or even the traditional exchange place in, the exchanges in the US for trading, Coinbase can let you pay centralized with Bitcoin underneath the way we currently pay with credit cards or PayPal. So Bitcoin can still do it, maybe not directly or indirectly, or as long as the US dollar is stable, that will, in the US, it will be that. In your local currency, you might use that. So I just know what it's not going to be.
Yeah, I completely agree with Peter and Tone. I will add that you can watch it in this way. You can pay with Bitcoin as a currency on top of any kind of credit card system. Right now, if you are Revolut, you can send dollars to your friend via Revolut or Bitcoin via Revolut. It's the same thing. The only difference in favor of Bitcoin, or Satoshis eventually, is that with Bitcoin you have a choice to use a completely trusted level like credit cards or Revolut, and that's okay for e-commerce. I mean, if you are in a place where regulation is good, security is good, and you don't really care for carding and stuff, let's use Bitcoin on top of a credit card system. That's not a problem. But then you can make a lot of modular choices to get more and more trustless. You can do a credit card or Lightning, which is kind of trustless, kind of secure, or base layer settlement, which is super secure but a little bit slow and expensive. With the alternative fiat money, you have the first choice, you can do the same, but you don't have the second choice or the third choice. So that's a net win for Bitcoin. The only reason that Bitcoin will take time to win over the alternative, which is fiat, is that fiat has two major advantages, which is basically the fact that there is a legal tender, so the demand for that is actually compulsory because of some laws that force you to accept it, so you may just want to accept that instead of Bitcoin. But that's, as it was said before, in a global world, legal tender laws are local, so in a very global e-commerce situation, they don't push demand so much as before. And then the second is Lindy effect. I mean, liquidity and history of US dollar is superior. Everybody's already, if you go around the world everywhere, in every black market from Venezuela to North Korea probably, people will recognize and accept US dollar. Bitcoin will have to make a lot better. We have the first kind of advantage will have to be so important and good to actually to overcompensate the second disadvantage.
Makes sense.
I was just going to add, in the marketplace, convenience almost always wins. And so whichever is the most convenient form of payment will be the form of payment that people use. And, if we're talking about, I can't see myself ever buying my groceries or my Amazon purchases or whatever with Bitcoin, partly because it's just more convenient to use fiat money in this instance. But secondly, because I'd rather keep my Bitcoins and I'd rather they took the fiat money, unless we're in one of those situations where Bitcoin's spiking to $20,000 and actually, do you know what, I'd rather offload a few, and if I can just buy some shit on Amazon, that's quite a good way of doing it. But, that aside, convenience will always take precedence. Now, we went out for dinner last night, and I bought dinner, because that's the kind of generous guy I am. And afterwards, the kind gentleman on my right was saying, let me pay my share. And I was like, all right, you can pay your share. And we were working out how to do it. And the most convenient way for Tone to pay his share was to send me some Bitcoins. It literally what? Otherwise we would have to go PayPal or send you it was just, so in that instance, Bitcoin was actually the best means of payment. And I must send you my wallet address. And so that's the kind of instance. So I don't see the growth in Bitcoin adoption worldwide coming from institutions. I think it's going to be from small businesses, freelance workers. I see, I'm repeating myself, but I see extraordinary growth from this. I said it in my presentation of the growth of the digital nomad. There's going to be 1 billion digital nomads by 2030, 2035. And these people, small businesses, the most convenient form of payment for them, a lot of the time, is just going to be Bitcoin. And that's where the growth is going to come.
So, something I think needs to be pointed out here is privacy is a big issue, and even for normal average people. I mean, if I get HIV and I need to go buy a book on it, the moment I do that on Amazon, suddenly health insurers can go find out my status and go deny me coverage. And also, even if I'm not the one with it and I'm buying it for someone else, I've got that in the back of my head thinking, well, if I get this, they might think I have this disease and still deny me coverage. And we know in the US and many other places, there's a lot of efforts to make this kind of algorithmic denying, algorithmic discrimination much more legal than it even is right now. And some countries are kind of going somewhat the opposite direction. You get, GDPR, which in certain cases would prevent that. But it's very tough for fiat payment rails to compete against this. Because there are many, many things, regulators, for instance, that are trying to make these things less and less and less private. So while I don't, think you would necessarily buy everything with Bitcoin, I think it would be quite, very feasible for a very large chunk of the world's population to periodically use it for systems like this. Or, potentially, I'll say this hopefully too, we get alternatives that do use fiat and are maybe easier to go use, but actually provide privacy. Canadian government, as an example, actually tried to introduce something called a mint chip, which would, long story short, be an actually private way of one person paying another person digitally. Would have been very stiff competition to Bitcoin, and from what I hear, it kind of got shut down by the more authoritarian elements of the Canadian government. Bitcoin can compete against this. It's not a surefire bet. Governments can wake up and allow these things to exist. But it's much easier for Bitcoin to compete against this.
I think Adam would like to share.
So it depends why you want people to use Bitcoin. I think you want people to use Bitcoin because they understand its intrinsic value and decide to opt to invest in some with understanding of what they're buying. So I think some people, another thing is I think some people think that they're invested so they want the price to go up, and they think the way the price to go up is to mass market to millions of people to use it for retail trade. But I think that's actually backwards, that retail trade creates almost zero impact, positive or negative, on the price because firstly, they're small values, so they don't add up to much. If each person has $10 or $100, you can have 1 million of them, and it will be some money, but it's flow through, right? They use it, they buy some stuff on Amazon, and what does Amazon do? They sell it immediately, right? So it's very high velocity, so it doesn't add up to much Bitcoin. A very small amount of Bitcoin could support millions of users trading like this. And secondly, they have no intrinsic value for it. If it gets converted and the stuff they buy gets shipped to the home address, it's not delivering any value whatsoever, any fundamental value, right? So whatever value it has in terms of finality or cost can be matched or exceeded by Visa or whoever they're using. So, and if you do care about price, I think it would be a much better marketing strategy to figure out the people with sensitivity to the issues that Bitcoin does fix, like unseizability. So asset protection is an industry in the world, and there's a lot of money wrapped up in asset protection tax structures and things. So reducing the cost of access to asset protection, that's a good one. Financial privacy, that's a good one. Bitcoin does lots of things that banks and financial institutions literally can't compete with. So I think if you want to sell it, you want to do some market research about where the people that value those things, what their watering holes are, where they read, where they talk to other people, and try to explain those, do some marketing about what Bitcoin does achieve, explain that better, make it easier to use, make it safer to use, and then you'll see people invest in it or use it for its real value, and that has a multiplicative effect. Then you get a network effect of higher value transactions that are very, very sticky transactions that have nowhere else to go. and we'll pay more for them. So I think that's the future of adoption. And I think getting stuck into, pushing people to use Bitcoin who don't really have a use for it is just leads to disappointment, right? Because you saw that in the last few years, there was a rush of like vanity adoption by merchants, so like it's hip, we accept Bitcoin, and then they removed it, and people are disappointed. Well, they're not disappointed because there was anything wrong with that. They're disappointed because it was a bad marketing strategy to try that, and that should have been predictable. So we should do it better next time.
I actually kind of disagree on this point because it's true that merchant adoption won't drive the price up, and maybe it can look pointless to force merchants that may not be that interested to accept Bitcoin to start accepting it. But the merchant adoption also, it's important in a way because it increases that usefulness of Bitcoin. So if I am a freelancer and Bitcoin seems to be the best option to receive a payment from a client, if I see that I can easily spend those Bitcoin for my daily expenses from merchant, that maybe they will sell it on the market right away, but still I can see that I can use that easily, I will be more happy to accept a Bitcoin payment. If I know that as soon as I receive the Bitcoin, then to pay for my expenses, I have to sell them on an exchange and then receive a bank transfer, and maybe there are also sort of complication. Maybe it's not as appealing anymore, even if Bitcoin itself it would be like a good option. So in a way, like pushing for too much for merchant adoption, it may sometimes be not very productive because then the merchant, after a few years, that doesn't see much volume, like stop accepting Bitcoin. But in a way, like you need both. You need to start from something, and sometimes it's easier to talk with few bigger merchants than try to make all like freelancer understand that Bitcoin is good.
Yeah. So let me modify what I said. So I think the mistake is to force it on users that have no intrinsic value. Merchant adoption, so that people do have a strong value, have convenience of use, is great, and it's good for people who are traveling a lot or living in different countries. They can just avoid needing to use a bank or deal with local currency. So.
Yeah.
Oh, thanks. So when it comes to Bitcoin and e-commerce and people using it, I think at the moment what we have seen is the first network effect in Bitcoin being dominant, which is speculation. And I think this is what Dominic attested to a minute ago, which is that at the moment you have sort of Gresham's law where bad money drives out good money, so people are saving their Bitcoin, they're not really spending it, which is why I think the second and third network effects of merchant adoption and consumerism have been suppressed. But in the future, I think, especially if we have sort of even more inflation in sort of fiat currencies and Bitcoin reaches a really high value, then we're going to see the opposite, which is Tyr's law, where good money drives out bad. And I think that's the point where we're really going to begin to see more merchants accept it. And the reason for that is that the value will be much higher. So if you're going to make the business case that you want to adopt Bitcoin, and at the moment it's only like $200 billion market cap, but in the future it's like 2, 3, 4 trillion, then the incentive for big businesses to then adopt Bitcoin is going to be much greater and offer those services. And then at that point, one thing I'll be looking for is something called margin compression, because once you have massive retailers adopting Bitcoin and they're starting to remove the cost of transactions that they have with the legacy system, then more and more retailers are going to have to follow their lead, because the big retailers that adopt it will be able to reduce their prices by passing on those savings for transaction costs. And at that point, other retailers are going to have margin compression, and then they will have to then adopt it as well. So what you might see then is a massive waterfall of adoption. So it could be, again, one of these network effects which goes from very slow to very fast suddenly. And so that's something that I'll be really looking forward to with the e-commerce. And I think Bitcoin can scale to get there, because from what I hear, Lightning could take Bitcoin up to something like 100,000 transactions per second. And, MasterCard is like 40,000, Visa's 20,000. So you've got something here which could easily onboard all the existing activity which happens in the legacy system. And so I think that is coming. But I think it's just going to be one of those network effects that comes in a little bit later.
I think that makes sense. My extended question to that question was that do we need the Instagram, Snapchat moment from the industry players What I mean is Amazon going to come and say tomorrow or maybe in 6 months or 1 year that guys, we accept Bitcoin? And I think that will really change in a big way everything, because the biggest global online merchant accepting Bitcoin or possibly any other cryptocurrency will automatically make people think, learn, know about what is this new mode of payment. Do we need that? Is it going to happen, or we don't need it?
I don't think we need it. Actually, if that is to happen, I made this argument. There's an article I wrote in 2014, I want to say, when Braintree was it? I never actually heard of it before, but it was something, subsidiary of PayPal was going to do it, and there was talk of PayPal accepting Bitcoin. If Amazon starts to accept, that's not what I want to hear. Like, I don't want to hear Amazon's accepting Bitcoin. What I want to hear is Amazon has employees in India that it wants to start paying in Bitcoin. I mean, that's what I want to hear. If I hear Amazon's accepting Bitcoin, I'm like, oh, there goes a crash in the price, because now all these people have a place to spend it, and Amazon is just going to sell it. That's really not what I want to hear. I want to hear them paying out some bonuses. They have a bunch of employees. They have a bunch of people that are demanding that they start paying them. And now they're accepting it because they want to they're not actually going to instantly convert it. Or they would allow merchants selling on Amazon to sell for Bitcoin, and they're just a middleman moving that Bitcoin from the buyer to the seller. That's what I want to hear from Amazon. Or Netflix popping up a QR code anywhere in the world on your TV, so you can just pay in Bitcoin to watch a movie. You don't even need an account. You don't need a subscription. Just offer it a la carte. I don't understand why they haven't even thought about this yet.
Makes sense.
If I may add something. So I think that regardless of the fact that we want that or not, I tend to agree with Tone. But the point is that it's also very unrealistic that the momentum of the adoption will come from incumbent, at least for a while, because incumbent has a cost structure which is shaped around existing paradigm. So usually when you have a paradigm shift, you don't have the incumbent as the first one to adapt. First you have some outsider taking advantage of the asymmetry brought by the technology. So if you have Gutenberg inventing the printing press, you know that you have like amanuensis monks copying books for 1,000 years. They are the best at what they do. They are very good at copying books by hand. They are not the first people you wait for adopting the printing press, because they already perfected their all their structure, their social, technical cost structure is shaped around existing technology. When something different happens, Mr. Gutenberg will probably leverage that as an outsider who cannot afford to hire a lot of monks, even because you cannot hire monks usually. He will be ready to adopt a new paradigm, while monks will eventually stop transcribing by hand, and then the Vatican libraries right now, they are all digitalized, but it doesn't come from that. It's not that, I mean, you have digital pictures, you don't wait for Kodak to start adopting digital pictures. You wait for other things making Kodak irrelevant, and then eventually Kodak either fails, or if it doesn't, it will adapt.
I mean, I don't think we should look to big companies to innovate. Big companies are followers. They're the next dinosaurs. So I think it's much more exciting and interesting to see circular trade in Bitcoin, a Bitcoin circular economy developing, and Lightning to function well kind of depends on that as well, because you don't want to see funds leaving the system because then you have to re-enter them. They need to recirculate, and you need Lightning exchange integration. So I mean, I think somebody in the last day or so gave some statistics about the number of people who are digital nomads today. So for example, let's say all digital nomads got paid in Bitcoin, kept all their money in Bitcoin, and transacted and traveled entirely with Bitcoin. And that becomes double-digit percentages, and it grows from there.
It's already 50%. 50%
of
digital nomads operate in the crypto economy to a greater number.
Okay. Yeah, the stat I didn't know was what percentage of the workforce in general, global workforce, is nomadic, or can work for Bitcoin, basically.
The estimates are for the that 1/3 of the freelance workforce will be nomadic by 2030, which would be, and the freelance workforce will be, the workforce will be 6 billion people, so the freelance workforce will be 3 billion, so the digital nomadic workforce will be 1 billion by 2030.
Okay, 1 billion Bitcoin users in a circular economy. That'll do something.
Yeah,
So what,
I'll say.
I think we should focus on planning for that and making that scale, making it secure, and helping them understand why that is a good thing to use and why.
Yeah, and in addition to that, you sort of have to remember what Bitcoin is, and continuing this theme of convenience, it was originally designed to be cash for the internet. And what do we use cash for? We use cash for small payments, we use cash for quick payments, we use cash for convenient payments, we use cash for private payments. But in Western societies at the moment, just 3% of money is cash. 97% of money is now digital. But if 3% of internet transactions were Bitcoin, that's a pretty big number.
I would contest the sentence that we use cash mostly for small payment. Actually, we use, especially in the Western world, we use mostly electronic IOUs like credit card for small payment, and cash is used mostly for settlement.
Not below about 50p. We still use cash below about 50p, and in America they don't.
Well, especially for face-to-face brick and mortar. But if you think about e-commerce, cash is because there is in the Bitcoin and scam coin space, there is this meme that cash means something like very cheap and fast to move.
Yeah.
But cash is super slow and expensive. Usually use that for settlement, and you want just credit to be fast, and cash is the
Sure, but if you're buying like a pint of milk or something like that, even today, you'd still use
only face-to-face. If I use the e-commerce,
well, it's immediate. Yeah. But the bizarre benefit of, or exciting thing about Bitcoin is as well as having this potential use for sort of small cross-border payments, I think a lot of people will actually use it for large payments because it is, real money. And its purchasing power will last. So I think it'll have this bizarre thing where it'll be used for small cross-border transactions, but also large ones.
I mean, I think kind of with this example of an incumbent accepting Bitcoin, I think it could actually have a major effect, but in a different way. And, I'll give an example of, where I'm from Ontario, Canada, and we have legal pot. The US does not. And in Ontario, it's a government-run store that goes and sells you your pot, and when you get to the end of the checkout process, it goes and asks for a Visa or MasterCard. And that transaction details go straight off to US servers that the US government can get access to very easily. There's no rights in the US to protection of your data if you're not a citizen. There's a little bit of rights if you are, but if you're not, there's zero rights. They can just get the data with no effort. And if you had someone like, say, the Canadian government, specifically Ontario government, saying, well, we're going to accept Bitcoin because this is not private enough, I think that would be a major effect, not so much for Bitcoin, but rather for the more fiat currency world, which would have to compete. I think you'd have a lot of pressure on the likes of Visa and MasterCard to offer a cryptographically secure, proven privacy solution. It may not be decentralized, it probably wouldn't be decentralized, but it would shake that whole thing up by showing that this kind of financial privacy matters. Same thing with drugstores. You go off and buy some drugs, prescribed by your doctor. The amounts are more than enough information to figure out what medical condition you have. That's just not acceptable. We should not live in that world. And having a few key people like that would radically change that discussion, even if it wouldn't make the Bitcoin price any higher.
And I would add to that, let's say you make that pot transaction or that illegal transaction when you're a 19-year-old student, and 25 years later you want to be a politician or something, the record of that illegal purchase, is there, and if a journalist or whoever wants to and wants to research it and find you out.
This is a legal transaction.
Yeah, I know, but the fact is, let's say I go, but you might then want to pursue a career in something where that legal transaction is illegal, and that thing can be used against you,
or it becomes
20
illegal.
years down the road.
Or it becomes illegal.
That makes sense. I agree on the a big moment. Let's see how that pans out. I definitely read some data on the Canadian wheat pot industry, how it affected their entire own economy and what kind of money they were able to raise through taxation. And it was a very, very big step. And I think a lot of countries are looking to do the same as well. With regards to your description about you completely got converted by Tone Ways in his talk. What was the turning point? Yeah, that's a new term. I think we should have it on Twitter soon. But what was the key point of you suddenly going back to Bitcoin 100% and having some doubts about altcoins? I still call them altcoins.
Well, listen, this was like the sort of the final nail on a journey that's been going on. It kind of started when we were looking to buy coins for Cypherpunk Holdings, the Canadian company that I'm a director of. And originally, we were planning to be 30% in Bitcoin and 70% in the other privacy coins allocated to, Monero, Litecoin, Zcash, and so on. And then I was just looking at them, and their charts were horrible at the time. I was just, we can't buy this shit. So we kept scaling it back, and then as each month went by, there just kept being reasons not to buy these various coins. And so the Bitcoin allocation went to 50%, and then it went to 66%. And then in August, we were having a row about it. And I said, look, we've got to have at least one privacy coin in our portfolio. Otherwise, we're just a Bitcoin company. And so we thought, we'll have Monero is like the sort of number one. So we'll be 80% Bitcoin and 20% Monero. And I was going 20%, and Matonis was going 10%, and Mo was meeting us in the middle at 15%. And then, we bought some Monero, and then we had to sell it because we were audited at the end of September, and the auditors wouldn't accept our Monero holdings for some reason. So we had to sell the Monero to buy it in Bitcoin. And then, so we're now 100% in Bitcoin. And the guys are going, well, look, the Monero price has fallen versus Bitcoin since we sold. We should buy it back, and we've made some Bitcoins on this. And I'm going, well, it's going to fall further. We just want to hold this one out. And so in the end, we've gone 90-10. But then, so I'm just like, it's ridiculous. And, in the meantime, we're investing in Samurai Wallet. And I didn't announce this at the conference because the deal hasn't been done yet, but it looks like we're just about to have an investment in Wasabi as well. And you see these kind of things, and you go, well, why do you even need Monero? And then, so all this is going through my head, and then I just listened to Tone. And, I've seen so many junior mining companies in my other life investing in mining. I'm talking about physical gold mining, just be found out, they try and make out that by investing in this junior mining company, you're actually investing in gold. And no, you're not. You're just investing in a bunch of crooked geologists. And I just saw Tone's talk, and I thought, oh, this is the same fucking story all over again.
I actually am a geologist. That was my
really?
degree. Yeah.
Well, there you go. So that's how you know. It takes one to know one, and so that's kind of the journey, but.
That's very interesting. Thank you for sharing that. I think Tone has been doing this job aggressively globally, and it's scary how many people he has converted so far. I sometimes really get scared about my own altcoin holdings after listening to Tone for a moment. And then I rewire my brain. I said, okay, I believe in myself, or something like that. But with regards to the narrative, which has been going on for many years, and I have seen this right from Roger Ver's first presentation 9 years ago, and it's still now everywhere globally, about leveling the playing field of wealth distribution and combining with the financial freedom facilitation of the global mass population. And there's only one thing which can make that happen, and it's Bitcoin. I understand the financial freedom part. I think Powell spoke on that in a very different manner as well. But I still don't get, or why should people believe the whole narrative of leveling the playing field of wealth distribution? How on earth is Bitcoin going to do that? I have really no idea about that.
I mean, why can't Libra do that? And I say that actually kind of seriously. Like, in terms of being able to move money around the world, if Libra can overcome these very, very, very big regulatory challenges, they might very well achieve that. It just depends on how aggressive governments are and whether or not the centralization kills them off. Maybe it will, maybe it won't.
So, with regards to Libra, it makes sense for a lot of the unbanked population globally when you look at Southeast Asia and many other parts of Asia. But I don't know how it still does the level playing field of wealth distribution. There was a very common narrative when the ICO boom was out of control globally. And I met a lot of people from very different countries who really were actually gambling with their money, participating in ICO. However, this population was fully aware about the risk they were taking to do so. And they said, we are okay to lose a couple of €100 by participating in this company, because still now, since our birth, we have never been able to participate in any IPO, no Uber, nothing. I mean, Uber is a bad example, but any good IPOs. And they really felt empowered that first time a fisherman sitting in a completely outskirt of Thailand is able to participate in ICO in London or Switzerland by contributing €200 worth of Ethereum. It was a very powerful moment.
I think you have at least three very clear ways in which Bitcoin levels the playing field. The first one is the permissionlessness of the system, basically allow you to overcome some kind of wealth thresholds to participate to stuff. So if you participate to a global financial market, you become richer because you can, on average, because you can exchange with more people, so your marginal utility grows. So if people can exchange with more people, they become richer. But most people cannot exchange with other people because they cannot participate in financial market because they are so underprivileged, so not powerful, that the more powerful player created thresholds in order to protect themselves from competition. So I'm rich, I create an entry barrier, so whoever is way less richer, less powerful, cannot enter and cannot compete. Permissionless systems tear down some of these barriers. The second major redistribution of money is that if Bitcoin succeeds as a monetary phenomenon, then it switches back the tendency of the system from a debt-based system in which you want to spend everything and to get into debt, to a saving system, a proper capitalist system in which you don't spend everything, you just save and then you invest what you saved. And if that happens, the power balance moves from debtors like nation states and other big players to savers, which are more, well, let's say a different class of people. And third is, in general, Bitcoin is a defensive technology. And when you have the defensive technology, usually the equilibrium changes in favor of the victim of the persecution and not of the perpetrator, because the perpetrator is powerful enough to use the state-of-the-art technology. So when you have the change, usually this change can, well, sometimes not, but like gunpowder, change the balance of power, sometimes in favor of the underprivileged party, because it was a paradigm shift, and like I said before, the incumbent was not ready to adapt to the paradigm shift.
I think it's important to focus. There's a difference between the unequal distribution of wealth and a level playing field. Now, you know, really, throughout all of history, there hasn't been a society where wealth has been equally distributed. And if you looked around the world today and said, where is there the most equal distribution of wealth within a country, the answer would probably be North Korea. That's probably where wealth is most evenly distributed. So instead of focusing on wealth being evenly distributed, and in fact, if you look at Bitcoin, the allocation of who owns the Bitcoins, it's those few early adopters have got an extraordinary allocation of Bitcoin in their favor compared to everyone else. I think the wealth of Bitcoin is even more unequally distributed than all the wealth statistics you get from Oxfam each year about land ownership worldwide. And more important than the equal distribution of wealth is to focus on instead the poorest people in society being much higher than they were, being much better off. And so, for example, you even get that with Bitcoin. You know, I might own very few Bitcoins compared to Satoshi Nakamoto, but the fact that I own a few Bitcoins has made me much richer than I would have been if I didn't own any Bitcoins in the first place. So that's one way in which Bitcoin's going to help it out. But the other way, and just following on from what you said, Giacomo, is the fact that we have a society where the worker is taxed much more heavily than the asset owner. And as a result, you have this imbalance between the asset owner and the worker. And most people, workers' tax, it ends up being, by the time you pay all your taxes, roughly 50% of everything you ever earn is taken from you. Not only are you taxed heavily, the money you are paid in for your work loses its value every year. And the salary increases you gain often don't compensate for the loss in purchasing power of that money. But if workers are being paid in a money that not only holds its value, but actually appreciates in value, then you see a massive change in the power dynamic. So that is how Bitcoin will not solve that problem, but help solve that problem.
Yeah, I want to add to that real quick. So, agree with pretty much everything you said. And Bitcoin levels the playing field the way internet levels the playing field, right? Like you have access to it and you don't need permission to use it. And people have access to the internet and you have access to YouTube and you can learn anything useful. So many useful things you can learn from YouTube, but instead most people just watch insanity on there, right? So it'll level the playing field if you care to look into it. Now, I have never been on this Bitcoin will bank the unbanked train. I've never got onto it. I was always the contrarian on that panel, saying I'm not really here to bank the unbanked with Bitcoin. I'm here for the middle class and actually the richer people in society to protect their wealth from the government that wants to seize their wealth so they can go and build the next Microsoft to help the unbanked in the same way that holding a little bit of Bitcoin for them versus holding Satoshi. I just don't see how a person in India or a person in the Philippines spending their only $20 on Bitcoin is going to somehow revolutionize the Bitcoin space. But some guy that may have 200,000 like Cyprus events where half your wealth just gets confiscated because it's sitting at a bank, that wealth could have been used to build some kind of a company. And just one more note on investments. I also think it's a very scammy practice to talk about how people that are like, I don't want to say poor people necessarily, but people that don't have a lot of money, to give them access to investing in ICOs by saying, well, the rich get richer because they can invest in these speculative companies. And that's completely ridiculous. If you are unbanked, the last thing you should be doing is investing in ICOs. That's really the last thing you should be doing. You should be figuring out how to get banked. On the flip side, if you are unbanked and someone is telling you, you can ICO your idea and then people will give you money, if you can figure out how to ICO your idea as an unbanked, you should be able to figure out how to get banked. It just doesn't make sense to me at all.
Also, when we talk about this banking the unbanked, there's very different meanings to what the word banking means. Some of it's about debt, some of it's about access to moving money around. Now, there's certainly a big chunk of the world where the problem they face is being able to move money around. And for them, the banking service that they're lacking is, and as an example, I've seen this firsthand in a Bitcoin meetup in Kenya, talking to farmers who, frankly, by their standards, are very well off, but they can't buy fertilizer from their suppliers because of silly cross-border restrictions, silly restrictions within their own countries. So they were using Bitcoin to just do the obvious thing of moving money around. But could those farmers get a loan? Depending on the situation, yes and no. But that type of banking, Bitcoin has nothing to do with because Bitcoin isn't about identity. And loans always have to be about identity because someone's got to know where you are to break your kneecaps when you don't pay up. It sounds kind of crude, but all this stuff ultimately goes back to using violence to force a person to pay up. And that's what that part of banking is, and it always will be. So, ask yourself, what type of banking are we talking about?
Yeah, can I jump in with one point here? So I completely agree with what everyone said, like things like playing by the same rules, pushing back on inflation, which is, I think, one of the biggest problems that the poor face, especially with depreciating asset. And you have the top benefiting from the can-tilling effect because they're closest to the money. And everyone deals with the inflation later on. But for me, one of the biggest is going to be removing coercion of the state. Because I don't think money in itself makes you powerful. And I think we learned that in 2008 when all the most powerful financial institutions in the world got usurped by something more powerful, which is the markets. And the only reason they survived is because of coercion of the state, who came in and then rescued all of those companies through bailouts. So I think when you have Bitcoin and you manage to begin the process of separating state from economics, then they will no longer, if Bitcoin goes mainstream, they will no longer have that ability to do that without direct taxation of the citizens. So it will remove the ability for, or the advantages of using coercion of the state. And I think it's a problem as old as time, that we've always had coercion of the state, which distorts the playing field in favor of those that have access to the state, which is those with big money who can then pay off or in positions of power who can then access the state. So I think, in general, that could be one of the main reasons where removing the state from economics is going to be one of the biggest levelers.
Well, myself, I'm not even sure I agree it is a problem we should aim to fix not to have economical imbalances. Also because usually when there are wealth imbalances is often something that happens when there is economic growth. So during the Industrial Revolution, there was huge imbalancing because those that were making the revolution happening were making a huge amount of money. Then when there is stagnation, the money started to level out and there is more quality. So Bitcoin is something that is growing very fast. So it's absolutely normal. There are inequalities that people that got early are making a huge amount of money. But it will something that is good because it's signaling that there is some value that is being created, so there is some growth. And this is something that if we consider something that has to be fixed, it will be fixed over time when there is stagnation and maturity.
Yeah, I mean, I think that another way, so you mentioned the Cantillon effects, which is that when inflation does happen, it tends to disadvantage the poor actually, because businesses that develop strong connections and favors with governments absorb most of the free money that the government's printing, and it's only the people at the bottom of the sort of supply chain that get the least benefit. They experience the inflation first and get the free money last. So apart from that, I think that, you know, it's a bit like when cell phones were first used. The first cell phones were bricks and cost probably $10,000 or something. And today they cost less than $100 in many parts of the world for a basic feature phone. So you can expect technology to get deployed and become cheaper over time, but that doesn't mean that at the beginning of cell phone adoption, you should have, you know, stopped the world. We've got to reduce the cost from $10,000 to $100 or it's never going to work, because selling those $10,000 phones funded the R&D to build the $1,000 phones that funded the R&D to build the $100 phones. So I think we should content ourselves with Bitcoin being sort of owning an area of finance, which is the unseizability and unfreezability. So that kind of asset protection kind of does exist for companies and wealthy individuals, because they can use offshore trusts and tax structures and put money in a different state which has different asset freezing rules. But the cost to do that kind of tax planning is like $1 million of investable money, which is out of reach for 99.9% of the world. So if we can you know, provide technology to the next 70% of the world, then, you know, within a period of 5 or 10 years or something, the technology will be more scalable and cheaper, and the economic wealth that's created by providing more frictionless trade amongst that section of society will make the whole world richer and pull the next 20% up. And in the meantime, the technology will improve and the scalability will improve. So I think we don't have to panic and, like, you know, try to provide Bitcoin to somebody who's living on $1 a day and can't afford a phone and has other concerns in life, to say we've got to find a way to give them Bitcoin, because it's not realistic at this stage. So I think that was an unpopular thing that some people said at various times, but I think it's just like practically true, but we're still providing a very real social benefit by helping the business operators in countries where people work for $1 a day to compete on the global market and become more profitable. With their labor costs, they can be very competitive, but they have poor banking services or poor contracts. So if they can secure contracts, they can pay people more, and the people with the necessary skills become short, so that the labor cost shortage drives the prices and the wages up locally. So I think it's just, you help the bottom sector by a trickle-down effect, and you help the middle sector in any given society by providing lower friction access to global trade.
Fantastic. Thank you, Adam.
Yeah, something I want to go. I think your point about other ways of hiding assets is very important, because when you think about it, the assets that the richest in the world, in our world have, are the ones that are easiest to tax. Whenever you hear about governments trying to get rid of financial privacy to stop tax evasion and all this, always remember that it's really hard to hide the existence of land. And it's really hard to hide the existence of big companies. There's all this things that rich people put their money into that's trivial to go tax in terms of how could you enforce tax law. If I have a big company, I'll have a dozen whistleblowers who'd be happy to report me to the IRS or wherever your local tax authority is. It's very, very difficult to avoid that unless, of course, you're politically connected. And that's ultimately why we see that tax evasion go on so easily at the high level, is they're politically connected. Bitcoin just, in technologies like it, just levels the playing field there and lets the people without the political power do exactly what the people with the political power can already do trivially.
Thank you, Peter. That's great. I think we are going to wrap up. We are already way out of time. But we'll take a couple of questions from the audience immediately. I think we have one gentleman asking a question right here.
Thanks for the panel. In fact, I wanted to share a use case that maybe you don't know it because, I'm from Argentina. In Argentina, we have a lot of scarcity of dollars. We are broke, come on. So the government restrict the importation of goods, of certain things, but not because they want to protect the local industry or stuff, because they have no money. So if you present that you want to import something, but you show that you are paying with World of Warcraft coin or Bitcoin or whatever, they will not care. So there is another use case there.
Thank you for that addition. We have many questions, but I'm just going to ask one which I got on Twitter right now. I think Tone is going to find this question very interesting.
Perfect.
The question is Bitcoin losing the decentralized and the open finance opportunity? And is companies like MakerDAO and DAI and Ethereum really taking a large and gigantic strides in that space? What do you think, Tone? Anybody else also, please feel free to add.
I think the only stride in the space that Ethereum is currently taking up is the void and enthusiasm that has been removed from OneCoin conferences and BitConnect conferences. I just don't see what else it's actually doing. I don't understand at all what the point or how the MakerDAI, that whole project, makes no sense to me, and it never did. And Ethereum can't scale. I mean, whatever MakerDAI token is, it will stop functioning, or they'll realize, like Tether, that $250,000 is spent on transaction fees every month, by a single company, which to me is centralized, no matter how much the MakerDAO creator or creators say that it's not. I don't think that. No.
I'll put it at a technical level. When you look at so many of these decentralized finance things, you find centralized points of failure like oracles and so on. And even ignoring those centralized points of failure, they keep failing because the fundamental economics of what they are trying to do doesn't really work. When you go see eye-popping 30% interest rates, that's a serious sign that this isn't a real thing. This is going to collapse under its own weight. There's something wrong here. There's no reason why you should be getting these interest rates out of there. And sure enough, some of them have gone and failed as the fundamental economics of their crazy, end level of meta financial engineering fails. Same way as we saw that in the real world when so many very complex ways of pricing things in finance in general have failed. So is that interesting? I mean, sure, if you're that kind of enthusiast, but I don't really think it has much bearing on the wider world.
I think that it's a matter of informational asymmetry that will eventually get solved by more education and skin in the game and feedback loops. The point is that it's normal and healthy to have some degrees of experimentation. So you have the dreamers dreaming about something new that doesn't exist. And that's fine, and we need that. Then you have on the other side the production level industry, and they have to provide something that works. So, for example, in the case series of derivative contracts. You have, let's even ignore the legacy institutional world. Let's think about Bitcoin, for example, versus dollar. You have BitMEX. BitMEX does work in a way. Of course, he has a lot of problems like political fragility, censorship. They have to KYC you at a certain point and to censor you. So it works and it has problems. Then there is the idea of the completely decentralized future market that has no flaws because, of course, it's a dream. The problem is that now people with which belongs to the dreamers, they are marketing a completely centralized solution, just like MakerDAO is no different from BitMEX. The idea of a decentralized MakerDAO is cool, but the realization of MakerDAO is just a BitMEX with some fraudulent marketing on top of it. Because you take the dream, you take the centralized project, you mix them, you shake them, and now people will think that the central point of failure of BitMEX are different from the ones of MakerDAO, but they are not. It's just in a way, the centralized projects are more honest than the fake decentralized project. But eventually, people with, as I said before in my presentation, the key is suffering. People will lose money, and that's super good, and they will learn.
Yeah, I mean, I agree with all of those things. I think the aspirations are fine. Like, it's interesting, genuinely interesting, and it's not that anybody else didn't have those ideas. It's just that they are honest about engineering realities. So I think, in practice, what works for high assurance systems is bottom-up design, which means building a Unix-like philosophy of very rigid and robust and simple composable things, and building things that you can defend and will withstand attack on top of them. And I think, unfortunately, there's a dynamic in the ICO-fueled space in the last few years to promise the moon and deliver things that don't really work because they're selling the marketing dream, right? So the more ambitious and all-singing thing they can present, they can push the price up. And of course, they've got no hope of implementing it. It's probably not even implementable, just logically, right? And so, but that's not to say that things that do that kind of thing properly won't evolve. They will just be built on harder engineering in simpler, more well-thought-out ways. The people doing the marketing are not connected to the engineering. They're kind of, they're pure marketing coins almost. Not to say there aren't developers there doing interesting and useful things, but it's very hard to build dependable systems when your attacker is running your code.
I think a problem we have in this whole space is acceptance of dishonesty. And I think this kind of comes out of there's just a lot of fraud out there. And the people who are participating in that, they need to go and accept it. And they need to kind of let their friends do it. I mean, I was just amazed when I read the Libra white paper and it said straight up, it's a decentralized system. I'm sorry, it's not. That's just fraud. In any sane world, there'd be 100 people on Twitter complaining about that from their own community. But that didn't happen. So be careful.
Just a flash. I agree with you, Peter, but in a way, the standard that we would like to see in the Bitcoin world are better than everything in the normal marketing outside. So if you find like a snack, and there is like the most tasty snack in the world, that's actually fraud at the same level of decentralization of Libra, because it's not the most tasty and healthy snack in the world. But we don't care because I think that, yeah, what happened is that in the outside technology, people normalize the normalization of fraud, so you know the marketing guys are going to lie, so you don't believe what you read. So the problem of Libra is not the marketing guys in Libra are lying because everybody's lying in marketing. The problem is people with huge information asymmetry, they believe that if it's written in a white paper, then it's somehow true. So we will probably grow out ignoring technical claims like we do in the food industry or fashion industry or whatever.
I mean, when I worked in engineering, I never once read a white paper that had a lie in it. Might have been misleading, but was never a lie.
Yeah, I think I said this a long time ago. I think like when it's all said and done, Satoshi might have another legacy of ruining the term white paper forever and ever and ever. No, I just want someone, for those watching the live stream, I just want someone to quote Peter by saying like the problem with the crypto space is acceptance of dishonesty. I think that was a really, really great quote. And I just want to comment, like I come from a traditional finance space working on Wall Street, and I know it has a really bad rap. And but what I realized after coming into the crypto space is that while I was on Wall Street, anyone I had ever interacted with, I had already, like, it's assumed and true that that person is intelligent, and I don't know if graduating university is necessarily a sign of intelligence, but it's not the other way around, right? Like, at least I know this person went to university and the person has moved up, you know, the private sector. So running into like a random crazy while working in finance or on Wall Street is incredibly rare. And where I ran into, like in the crypto space, was someone is telling me about their project, and the first thing I got to figure out is, did this guy even graduate high school? Or did he drop out of high school because it was too easy for him, or because it was too hard for him? And usually it's the latter. And like that's the kind of thing that I never had to think about before I got to crypto. I have to figure out, like, is this person crazy or not?
Guys, thank you for everybody's value additions and answers. I think Adam wanted to add something to that one, and then we can wrap this up and thank everybody.
Yeah, I mean, I was just going back to the honesty in advertising topic. So it's, you know, one of the legacies of Ethereum, which is now competing with dozens of clones of itself, is in finding creative ways to attack honesty in engineering. So, you know, the topic we were talking about there, about maximalism, is just an attempt to normalize dishonest marketing, actually. When you get down to it, it's very difficult to articulate against, which is why it was a clever marketing strategy. But that's what it is. It's a way to normalize dishonesty.
Now, really finish. That's a clever difference, because indeed, in a normal market like food, you can have the pasta which says that it's the healthiest and tastiest pasta in the world, which is a lie. But then if a nutritionist expert says it's a lie, it doesn't get attacked as a maximalist. So probably the level we have to, probably marketing guy will not stop lying, but at least they will stop complaining if some expert will point out a lie. That would be already something.
I've got a solution to the problem not only of inherent dishonesty, but also to the problem of nut jobs, cranks, crooks, and mental cases, and that is more regulation in the sector.
Again, one last quick thought is that like the other thing that kind of frustrates me when it comes to like the Bitcoin and then all the other, another great quote, Ethereum is competing with a dozen clones of itself, but which is really true, is that like when it comes to people criticizing Bitcoin, they will find the smallest, most obscure theoretical threat to Bitcoin, and they talk about it like it's fact and how it's imminent to happen. But on the flip side, you can point out the most obvious, easily to do threat on an altcoin, and they're like, oh, that's just a theory. That's not going to happen.
Guys, thank you so much for all the value addition answers. Big applause and thank you to everybody. A special thanks to Agatha, Istefan, and Nind for putting it all together, and for the Cluj Napoca audience for supporting this. Thank you, guys.